All right, let's jump in. We're looking today at a really intense financial moment that happened recently, basically, a massive stress test for some major crypto networks. This wasn't just a minor dip, it became a real test of the underlying blockchain technology itself. The scale was pretty huge. We saw a big market sell-off sparked by, wider economic stuff, and it led to over $19 billion in liquidations. Just for perspective, Bitcoin even briefly dropped below $105,000. This was fast, heavy action, a real demand for immediate settlement.
Exactly. And moments like that, that's when you really see what these systems are made of, right? Forget the marketing hype. This is about raw engineering under pressure. So our goal here is to dig into how two of the biggest players, Solana and Ethereum, actually held up when users were scrambling. We're comparing their performance when people really needed them, trying to avoid massive losses. Which one stayed resilient, and what does it tell us about their fundamental design?
Okay, so first up, just understanding the pressure cooker environment. These big liquidation events, they're like the ultimate test for decentralized systems, aren't they?
They absolutely are. It really exposes the foundations.
It's that instant demand 0 to 60 on throughput.
Yeah, and what users need in that moment, it boils down to three simple things, really. Access, can you even get to the network? Affordability, can you actually pay to make a transaction? And speed, does it happen instantly? Because if you've got DeFi positions open and your transaction is stuck or too expensive, you're just watching money disappear. That's the real world test.
Right. And there's this observation from a major treasury firm we looked at. They basically said, when the biggest wave of liquidations hit last Friday, the difference between these two chains was, well, stark.
Immediate, yeah.
It gave a very practical answer to which architecture could handle that kind of panic.
So let's dig into Ethereum's side of things during that chaos. Despite its size and, its history, the network definitely showed signs of strain. The performance data paints a clear picture. The base layer, the layer 1, was only managing around, 13 to 15 transactions per second?
TPS.
Yeah, roughly 13, 15 TPS.
And block times, which is how long you wait for your transaction to be confirmed, they stretched out too. Up to 14, maybe 15 seconds on average.
Which feels like an eternity when the market's plunging.
Absolutely, seconds count.
And the big consequence of that congestion, cost. The gas fees just exploded.
How high did they go?
At the peak, we saw fees jump over $500 for one transaction.
Wow. $500?
Yeah. I mean, think about that. It instantly makes the network unusable for almost everyone. Your average user is completely priced out, wallet access slows down, DeFi operations just stall.
We heard from a researcher, didn't we? Someone who actually had positions on both chains.
We did, yeah. A crypto researcher who was actively trying to manage DeFi positions during the crash. Their take on Ethereum, just unusable, said the costs were impossible, and even basic wallet services were timing out or failing. I mean, if it costs more to try and save your capital than the capital you're trying to save, the system isn't working for you.
Okay, but what about the layer 2s? Ethereum's scaling plan relies heavily on things like Arbitrum and Base, right? They usually handle the load.
They do, and they generally work very well under normal conditions. That's absolutely true. They're designed to offload activity from the mainnet.
So why did the mainnet still buckle?
That's the crucial point. Layer 2s handle a lot of the execution, but certain critical, high-value actions, think large liquidations, important arbitrage, or even just moving funds back to the layer 1 for safety, they still need to settle on that base Ethereum layer. So when panic hits, everyone makes a dash for that layer 1 finality and security. And that base layer, with its, roughly 15 PPS capacity, which is part of its security design, mind you, it just gets overwhelmed. It's like trying to funnel a tidal wave through a garden hose. The layer 2s might be working fine, but the final settlement layer, the mainnet itself, it just choked.
Okay, so that sets up the contrast quite dramatically. Let's pivot to Solana. How did it fare during that exact same high-stress period?
Well, this is where it gets really interesting, as you said.
While Ethereum was struggling around 15 TPS, Solana was reportedly sustaining much, much higher speeds.
That's right. The data shows it handled around 1,200 to 1,300 transactions per second, consistently through the peak chaos.
12 to 1,300. Compared to 15.
Exactly. Orders of magnitude faster.
And that speed meant faster confirmations, too.
Absolutely. Blocks were finalizing incredibly quickly, somewhere between 350 and 450 milliseconds.
Milliseconds. Less than half a second.
Less than half a second confirmation time, which, again, in a panic, is crucial.
And what about the fees on Solana? Did they also shoot up?
They did see a brief spike, yes, during the absolute peak madness, but spike is relative here.
Okay.
Fees momentarily hit maybe 20 or 30 cents.
Cents, not dollars.
Cents, 20 to 30 cents max. And importantly, they dropped back down almost immediately to less than a single cent.
Wow. Okay, so usable.
Very usable. And the network itself remained stable. No major reports of slowdowns, no congestion locking people out. It just kept running.
So what's behind that performance? We saw mentions of tech, like FireDancer, QUIC, stake-weighted QoS. These aren't just marketing terms, right? They actually did something here.
There are specific technical upgrades and design choices, yeah. Stake-weighted QoS, for instance, that's quality of service. It's quite clever.
How does that work in practice, especially during a panic?
Well, it essentially gives priority to transactions based on their economic weight. So transactions associated with more staked SOL or perhaps paying slightly higher priority fees get preferential treatment when the network is busy. This means someone trying to save a large DeFi position, a really critical economic action, is less likely to get squeezed out by, say, low-value spam transactions. It prioritizes the important stuff.
That makes sense. It keeps the vital traffic flowing.
Exactly. And things like QUIC help speed up communication between the validators running the network, and FireDancer is a whole new validator client aiming for even more speed through parallel processing. These weren't just ideas on paper, they were demonstrably helping the network absorb that huge 1,300 PPS wave while keeping costs predictable.
And the user experience confirms it, that same researcher.
Right. The one who found Ethereum unusable. Their report on Solana was 0 issues. Called it the most reliable and performant chain during that heavy load.
That's a pretty stark difference in real-world experience.
So pulling this all together, what the stress test really did was throw the core design philosophies into sharp relief. You have Solana, built from the ground up for high throughput, massive parallel processing speed, and you have Ethereum's base layer, which prioritizes security and decentralization on layer 1 above all else, expecting layer 2 solutions to provide the scalability.
Okay, but let's bring in the classic counter-argument here because it's important for, getting the full picture. Solana's speed has historically come with questions about centralization, right?
Yeah.
Higher hardware requirements for validators, fewer nodes compared to Ethereum. Did the analysis touch on whether that trade-off still holds, or if this performance changes the calculation?
That's a crucial question. And yes, the analysis acknowledges that the decentralization critique, based on validator requirements and count, is still technically valid. However, what the stress test highlighted was a different kind of trade-off, one forced by the market conditions. When you've got potentially billions at stake and seconds matter...
Practical usability becomes paramount.
Precisely. Theoretical decentralization doesn't help much if you literally cannot get your transaction processed. Reliability and accessibility, the ability to use the network, suddenly became the #1 priority for users in that moment.
So it forced a reevaluation of priorities, at least in that context.
It seems so. Again, we have to be clear. Ethereum has strengths, its long track record, its very wide decentralization is significant. But what Solana demonstrated here was its ability to deliver on its core promise. Consistent high speed and low cost, even under extreme duress. And for certain use cases, high-frequency trading, large-scale DeFi, that proven reliability is becoming absolutely critical. The market, in a way, voted with its transaction attempts.
Which leads to the future implications. This kind of demonstrated performance, especially coupled with Solana's improved uptime record, over 20 months straight now since early 2023.
That's right, a solid track record now.
It suggests Solana could become increasingly attractive, right? For traders, for developers building demanding apps, for institutions where performance under stress isn't just nice to have, it's essential.
It certainly makes a strong case. Predictable performance during chaotic market events could be a major differentiator moving forward.
So wrapping this up, what should you take away from all this? We've seen pretty clear evidence of how these two foundational blockchain technologies reacted very differently when faced with a massive simultaneous rush of users.
Yeah, a real-world test.
Their core designs dictated how they handled that sudden, intense pressure. One bottlenecked, one kept flowing.
So here's something to think about as you watch this space evolve. If those peak stress moments, the liquidations, the panic sells, the crucial arbitrage opportunities, if those moments now demand absolute accessibility and affordability, does Solana's performance here signal a fundamental shift? Does the need for raw speed and reliability on the base layer change the competitive landscape, even with layer 2s handling normal traffic? When everything is on the line, what matters more to you? Is it the absolute maximum throughput or the maximum number of validators ensuring decentralization? It's a fascinating question,